This is still 10 ounces of silver. Welcome to Ron's Basement. Thank you for joining me today. Have we reached an inflection point, or have we reached an infection point? That's the question gold, silver, precious metal mining investors want an answer to. I have a strong idea, a strong notion, if you will, that there's two scenarios, two ways things could play out in the coming months, quarters, years, both of which very well could be positive for the price of silver and gold. First, I want to review what's going on in the market right now, today. We'll talk about the two scenarios, and then I want to tell you something about the strong US dollar that I wasn't aware of, you very well may not be aware of, and is a very interesting point to ponder. Let's get started right now. Gold is hanging in there right at $1,700 per ounce. I still have a hard time saying that, and the thought that I may have to sit here at some point in the near future and talk to you about $1,600 range gold is giving me high blood pressure. But nonetheless, putting up a fight right now at $1,700 per ounce. Come on, gold. We are rooting for you. Silver, this morning's up 2%, about $18.50 per ounce. We'd like to see silver get back to 20 bucks. That might take a little while, but man, we'd like to get that $20 range back for silver and then watch it build a platform from which it could launch into the coming months and years. The GDXJ, the Junior Gold Mining Index, is at $30 per share. Need I remind you that just 3 months ago, exactly 3 months ago, the GDXJ index was at 52. That means it has dropped 40% in the last 3 months. And many of us know that some of the even more junior exploration and development companies within the precious metal sector have had even more precipitous falls, bigger falls, 70%, 80%, and in some cases 90%. However, the kind of mid-sized companies that make up the GDXJ, well, they've only fallen 40% in the last 3 months. Hang in there, guys. Things will get better. And I wanted to mention to you one more time, I appreciate you joining me here in Ron's Basement. You are always welcome here. I'm making this video for you right now. Right now, you are watching it through the miracle of modern technology. You're always welcome here in the basement. Anytime, 24 hours a day. I'm not going to try to sell you anything. The only cost to come here is a click of your mouse or a touch of your screen on your cell phone. So come back. Please subscribe, give the video a thumbs up, and turn on the bell notifications. That way you get alerted every time I send out a new video. And if you want to tweet my video, that would be helpful. I am trying to grow this channel, and I appreciate you being here with me today. We're going to talk about the strong US dollar a little more at the end of this video, but first I want to tell you about these two scenarios that I see potentially playing out, which I think, call me the eternal optimist, maybe you are too, but I think could be very bullish for, very good for the price of gold. We're dealing with high inflation. We're dealing with a hawkish Fed. The first scenario that I see potentially playing out is that, number one, inflation actually doesn't get better. Now, I think the odds are against that. I think inflation will come down, but if inflation were to remain persistent in this 10% range, or maybe even go higher, at some point, regardless of what people think the Fed's going to do, the Fed already told us unconditional. They're going to do anything. At some point, higher inflation will have to be recognized by the precious metals. It'll be creating a stagflationary environment. It will be good for the price of precious metals. And I think maybe I don't know how to say this, but they've used all the negative juice they can against this idea that high inflation is going to mean a hawkish Fed. I mean, like, they've kind of played that whole hand out. So if inflation were to continue higher, I'm not saying I think it is, but if it were, that could be very good for the price of gold. Scenario number 2 would be inflation coming down, which I think is probably more likely. We're seeing big decreases in the price of things like steel, some of the food commodities, grains, those types of things that, and they're going to want to brag about, oh, inflation's coming down. Well, that will be perceived under this scenario number 2 as setting the stage for the Fed to be less hawkish. And if they're less hawkish, that will be very, very positive for the price of precious metals. Nonetheless, the Fed has painted themselves in a corner. I'm not going to go completely down that rabbit hole with you, but we know that mathematically, just with the state of the country's debt levels and the money printing that's gone on, the Fed's painted in a corner. Eventually, the powers that be, the powers of nature, the powers of the market are going to overwhelm the manipulation that's gone on by the Feds, by the markets, and the price of gold and silver will do very, very well. This is still 10 ounces of silver, okay? It was 10 ounces of silver 6 months ago, and it's 10 ounces of silver now. It will retain its value, and it will do very well in the future. Let's talk briefly about the U.S. dollar. Headline news, the U.S. dollar is at historic levels. Not historic record, but definitely historic levels. The DXY around 108, 109 yesterday. A strong dollar is bad for the price of precious metals. Now that's all tied in with the hawkish Fed stance, which, as I previously described, could soon be going back to a more dovish stance, or at least a less hawkish stance. That will be bad for the price of the U.S. dollar. The U.S. dollar will come down relative to the other currencies. Now, some people are calling for the dollar going to 150 or, continuing on this astronomical ride up. That is going to create a ton of problems, not just here in the U.S., but throughout the world. We're seeing problems in countries like Panama, Sri Lanka, all over the world, because this U.S. dollar is making things even more prohibitively expensive in a lot of smaller countries than what we're dealing with here in the United States. And one more key point to remember about the dollar is, I read this morning, I was very surprised. The S&P 500 companies get 40% of their revenue from outside of the United States. A strong dollar is bad, bad, bad for that, right? That money they're getting in euros and yen and any other foreign currency is worth much, much less. This is going to hurt. This high dollar is going to definitely hurt the revenue levels of the S&P 500 companies. They're going to be screaming about it, and things will reverse sometime in the near future. I'd be curious 6 months from now where the US dollar stands. Why don't you tell me in the comment section below? Hey, thanks for watching. I appreciate you being here with me here in the basement. Don't forget, you're always welcome, and I'll look forward to seeing you next time.